Imagine getting a huge targeted tax cut straight from Washington, only to have your own state government will snatch it right back before it even hits your bank account.
It's a really frustrating situation, and it's the reality for millions of Americans right now. This is a big conflict between federal tax relief and state budgets that are just desperate for cash.
And the source of this whole thing, for our deep dive today, is the One Big Beautiful Bill Act, or OBBBA for short, which was signed by President Trump back in the summer of 2025.
Right, and this is not a small change. The OBBA was designed as historic tax relief, aimed right at the working class.
We're talking about eliminating federal income tax on qualified tips up to $25,000.
And on the premium portion of overtime pay, up to $12,500, it was massive.
I remember Treasury Secretary Scott Bessent called it, and I think this is a direct quote, the most pro-worker, pro-family legislation in a generation.
He did. But almost immediately, we saw a pattern emerge in certain states, places like New York, Illinois, California, Colorado.
Literal strongholds, basically.
Well, they're using these technical tax maneuvers to make sure their residents can't actually feel those savings on their state taxes.
So that's our mission for this deep dive. We're going to unpack exactly how these states are doing this, what it costs you when you go to file your state taxes, and how politics seems to be getting in the way of what looks like straightforward financial relief.
Okay, so let's start with the federal promise itself, because the OBBA was so targeted.
No, this wasn't for the super rich.
No, not at all. The deduction runs through 2028, and it's aimed squarely at the middle class. Single filers making under $150,000 and joint filers under $300,000.
And if you fall under that, you can deduct up to $25,000 in tips from what you owe the federal government. I mean, that's a huge chunk of income that's suddenly tax-free.
It is. And the list of jobs that qualify is enormous. I think nearly 70 professions. The whole service industry, servers, bartenders, barbers, cosmetologists.
Even gig workers, right. That's the one that really surprised me.
Yes. Ride-hailing food delivery drivers. And the stats there are just staggering.
And get this. According to Gridwise Analytics, for food delivery drivers, tips make up more than 53% of their total income.
Think about that. More than half of what you earn, suddenly free from federal taxes. Even for, say, a server in a sit-down restaurant, tips were still about 17% of their income last month.
So this is money that immediately boosts your take-home pay.
Exactly. But it wasn't just tips. The overtime part is key, too. That hits factory workers, linemen, construction crews, anyone punching the clock past 40 hours.
And it's only for the premium portion of the overtime. What does that actually mean in practice?
So that's an important detail. If you get time and a half, you get your normal wage, the time plus an extra half, right? The half time.
Okay.
The OBBBA deduction is only for that extra premium part. So if you make, say, $30 an hour, your overtime pay is $45. The OBBBA lets you deduct that extra $15 an hour from your federal taxes.
I see. So it's specifically rewarding the extra effort, the extra hours. And this idea isn't even, exclusively partisan. I remember former Vice President Kamala Harris pitched a similar no tax on tips idea.
She did. The idea of tax relief for workers is, of course, broadly popular. But I think when it was actually delivered by the other party, the political opposition just immediately focused on blocking its success.
Which brings us to the really complicated part.
Yeah.
The blue state blockade. How can a state government legally deny a federal tax break that's already law? Let's talk about decoupling.
Right. To get decoupling, you have to know how states calculate their taxes. Unlike the federal government, states have to balance their budgets.
No deficit spending.
Exactly. So to make things simple, most of them start with your federal adjusted gross income, your AGI, to figure out what you owe them.
So your AGI is your income before you take major deductions.
Precisely. And here's the catch. The OBBA deductions for tips and overtime, they're taken after your AGI is calculated. So if a state just uses the federal AGI as its starting number,
they'd still be taxing the tips and overtime because that money was included in the AGI to begin with. That feels like a technical trapdoor.
It is. So if a state wants to avoid losing that tax revenue, they pass a law or issue a ruling to officially decouple. They disconnect their state tax math from those new federal deductions.
So they're basically saying, we see you took that deduction on your federal form, but for our state form, you have to add that money right back in.
That's exactly what it is, an add back. You pay less to the feds, but you pay the state tax on the original higher amount.
Okay, that makes sense, structurally at least. So which states are actually doing this?
The list we have is New York, Illinois, Colorado, D.C., Maine, and California. And Secretary Bessent has been really vocal about it, specifically accusing Governors Hochul in New York and Pritzker in Illinois of deliberately blocking relief.
And in a state like Illinois, because it uses AGI as its base, it was a pretty simple choice for them, right? Just opt out.
Yes, a selective denial to protect their revenue. New York did the same. And in California, it was even more explicit. Well, according to the sources, Democrats in the state legislature there actually voted to reject a proposal that would have ended state taxes on tips. It wasn't a passive decision, it was an active vote.
Wow. And I read something about California's own overtime laws making things even worse for workers there.
That's right. California requires overtime for work over 8 hours in a day, not just 40 in a week. Some of that daily overtime isn't even eligible for the federal deduction, so those workers get even less relief.
It's no wonder Bessent framed this so aggressively.
Hmm.
He compared the governors to the Grinches who stole Christmas. But to be fair, if a state is staring down a $750 million budget hole, isn't decoupling almost necessary to avoid, cutting services?
And that's the heart of the debate. That's the argument from the states. They'd say if they conform to the federal cut, they create this huge revenue shortfall overnight. They argue they're protecting schools, roads, healthcare.
But the conservative critique flips that completely.
It does. That argument says this isn't a revenue problem, it's a spending addiction. That states like Colorado just chose to protect the size of their government instead of the size of a worker's paycheck.
And in Colorado, there's some evidence to back that up, right? They didn't just decouple.
No, they didn't. They were facing that budget hole, and lawmakers there explicitly killed a separate bill that would have restored the overtime tax break for workers. It was a very clear choice.
So let's zoom in on that. What does this maneuvering actually cost a worker in one of these states?
It can be the difference between getting a refund and owing the state money. If you live in Illinois, for example, and you took the deductions on your federal return, you might get a surprise bill from the state demanding you pay their 4.95% tax on income you thought was tax-free.
Well, and Colorado gives us the clearest numbers on this.
It does. They passed House Bill 251296. And starting next tax year, Coloradans have to actively add back that federal overtime deduction when they do their state taxes.
And that single move is worth how much to the state?
It's estimated to be between $48 and $118 million a year for the state's budget.
So for you, the factory worker, what does that look like?
Okay, let's say you claimed a $10,000 overtime deduction federally. In Colorado, with their 4.4% tax rate, you'll pay about $440 extra in state taxes. Money the federal government said was yours to keep.
$440. That's not pocket change. That's a car payment, that's groceries for a couple of months.
Absolutely. And beyond direct hit, this two-tiered system creates other kind of hidden risks.
Like what?
The risk of just making a mistake is huge. Think about a self-employed gig worker. Navigating federal deductions versus state add-backs without an accountant, it's almost impossible. A lot of people are going to file incorrect returns without even meaning to.
And then there's this marriage penalty I read about. This seems completely backward for a pro-family bill.
It's a really bizarre flaw in the structure. A single tipped worker can claim the full $25,000 deduction, but if two tipped workers get married and file jointly, they can only claim $25,000 total. Their combined limit is the same as a single person's.
That's a direct financial penalty for getting married if you're both in the service industry.
It is. It just shows how these state-level complications can create these really punitive, unintended consequences.
And it wasn't just about tips and overtime. The political resistance seemed to be against the whole bill.
That's right. The OBBBA also had a new tax deduction for seniors on Social Security. But you even saw some of these states reject completely free federal money that was meant to help low-income parents with school choice.
When you hear that, it starts to sound less like a budget decision and more like...
It strengthens the political argument, yes, that the goal might be to just sabotage the federal law entirely to prevent it from being seen as a success, even if it hurts their own citizens.
But when politicians don't deliver, the people sometimes fight back. And that's exactly what's happening in Colorado now.
Yes, this is fascinating. Citizens there are so frustrated they're pursuing something called Initiative 119 for the November 2026 ballot.
So a direct vote by the people.
Exactly. Direct democracy to just bypass the legislature completely. The initiative would permanently eliminate the state tax on both tips and overtime. It forces the state to conform.
It's the people trying to ensure they control their own paychecks, not the politicians.
That's the idea behind it, yes.
Okay, so let's try to wrap this all up for you. The OBBBA delivered real, significant tax relief to the working class. We're talking barbers, bartenders, delivery drivers, factory
But
workers.
state governments, facing their own budget problems and, driven by some partisan opposition, are actively overriding that benefit. They're using this complex tool called decoupling.
And what this means for you, if you earn tips or overtime in a state like New York, Illinois, or Colorado, is that you have to understand your state is probably forcing you to pay higher taxes. You need to be ready for that state tax bill, even if you saved a lot federally.
And I think the final thought to leave you with is this. If the government is willing to fight this hard, using these complex add-backs and maneuvers to tax the extra money you earned by working harder, what line won't they cross to control the rest of your paycheck? It really shows that tax policy is never just about the numbers. It's always about political power.